Bismillah ar-Rahman ar-Rahim. In this video, I'm going to talk about our chapter 7 of our course, the Internal Auditing and Control course. However, if you refer to the book, it's chapter 8 of our book. The chapter title is Risk of a Fraud and Illegal Acts. In this chapter, we will cover the definition of a fraud, also the fraud triangle, which most of you have covered in the accounting information system. Also, I'm going to talk about key principles for managing fraud risk and the governance over the fraud risk management program, as well as fraud risk assessment, prevention or fraud detection, and the fraud investigation and corrective action. And all of these are part of the fraud risk principles and program. And lastly, we will talk about implication for internal auditors and others for the implication on the standard about fraud. So let's get started. The definition of fraud. COSO defines frauds as any intentional act or omission designed to deceive others, resulting in victims suffering a loss or the perpetrator achieving a gain. So, if we refer to COSO definition, it says that it's an intentional act, either an act or an omission of information, and this act is designed to either a victim will suffer a loss and or a perpetrator will achieve a gain. This is how COSO defined it. Also, the accounting the AICBA has defined the fraud in a different way, because if you know the institution of certified public accounting has different view. It's focused on the financial statement. So it's defined a fraud that any illegal act characterized by deceit, concealment, or violation of a trust. Frauds are perpetrated by parties and organizations to obtain money or property or services, to avoid payment or loss of services, or to secure personal or business advantage. If we focus on the AICBA definition, we will see it's focused in misstatement arising of a fraud financial reporting and misstatement arising from misappropriation of assets, which we will talk about later. And also, this definition discusses the concept of fraud by evaluating its relationship to and effect on the organization financial statement. As I said before, an institution focus on the publicly traded company and the financial statement. So let's now talk about the fraud financial reporting and misappropriation of assets. The fraudulent financial reporting, which we refer to FFR, it involves intentional misstatement or omission of amount or disclosure in financial statement that designed to deceive financial statement users. So FFR is designed to deceive financial statement user, so that the user of these financial statement will not have the right picture of the organization on hand. An examples of the FFR could be an overstating revenue or understating liabilities and expenses. FFR can be accomplished not only in one way. It could be accomplished in either of these three ways. The first way is manipulating accounting record, either by putting something false or altering some accounting record, or other supporting documents which the financial statement are prepared. So if we falsify the supporting documents, we will have falsify financial statement, because the financial statement are prepared through these accounting record and supporting document. Also, the FFR could be accomplished through misrepresentation or intentionally omitting from the financial statement event, transaction, or other significant information. So it doesn't need to say something wrong, even if we miss or omit significant information. It's important. For example, if we suspect in the future that we will have a huge loss in some of our production line, we must report it. This is what the gap says, and this is what the IFRS says too. So if we miss some information like this and we did not state it in the financial report, this could lead the financial users to have or deceive the financial users. The third way is intentionally misapplying accounting principle relating to amounts, classification, manner, or presentation of disclosure. So that's mean, for example, if we change the way we account for inventory, either, for example, we were using the first in first out, but we have shifted to the last in first out. This is must be mentioned, and we must have a satisfaction for why we have shifted. But some people will do it for purpose like to maximizing either the income or minimizing the income for tax reason. However, the reason was this is could be classified as intentionally misapplying accounting principle. The nature of these misstatements or omission is failure of the financial statement to be prepared in conformity with GAAP or in conformity with the IFRS. Okay, this is what FFR mean, or fraudulent financial reporting. The misappropriation of assets, it's arising from misappropriation of assets either by sometimes we refer to it as embezzlement or leverage or defalcation. What does that mean? For example, embezzlement, the bookkeeper who takes the customer refund for himself could be says as embezzlement. So he has or he misused the assets of cash because he took the cash from the customer as a refund but did not report it. So this will called embezzlement, and it's a way of misappropriation of assets. Misappropriation of assets involve theft of an organization assets in which affect the theft causes the financial statement not to prepared conforming with the GAAP. So if the bookkeeper have stolen some of the money and did not report it, the financial statement will not confirm or not be prepared conforming with GAAP. Misappropriation of assets can be prepared in various ways, either embezzlement, I said, embezzlement receipt, or stealing assets, for example, from the inventory, or causing an entity to pay for goods or services that not have been received. For example, they make fake transaction to purchase good that hasn't been received, and mostly to steal the cash from this transaction. Okay. And now we will move to the fraud triangle, which is most of you have covered in the accounting information system. The fraud triangle, it's an important conceptual framework to understand the fraud. The fraud triangle highlights the root causes of fraud. So whenever these circumstances become fraud, will mostly occur. What are the components of this triangle? The first component is perceive needs, which is sometimes a pressure. What does mean? For example, an employee has a pressure either because of his social situation or a pressure from management. This is could be a pressure to push the employee or the perpetrator to commit a fraud. Also, the second component is to perceive opportunity. So, for example, weak internal control, it's a very good opportunity to commit a fraud. The third one, which we talk in depth about it, is rationalization. Rationalization, the fraudulent or the perpetrator will not really think that he's doing something wrong. He give himself or herself an execution or excuses for what he's done. Typical list of what he might do to rationalize his action. If, for example, he will say for himself or she will say for herself, everyone is doing what, so am I not different. Also, sometimes they justify that they will take money temporary, like it will be borrowing. I need the money. I will just take it and return it back after, for example, gambling or betting or winning the lottery, for example. The third rationalization or way to rationalize their action, the perpetrator may like rationalize himself by saying that, for example, the employer is underpaying me, so I deserve more than that. This is my money, or this is what I must take. So they rationalize their action. Also, another way, they may rationalize themselves by saying that this money, it will not hurt the organization, it's just a little amount of money, it's nothing compared to what the organization have, and this is still wrong. Lastly, it's not a big serious. I will, for example, use the paper for I will use the printer, the papers for my personal use. It's not a really serious matter, but it is still a fraud. Okay, so this is like 5 ways how perpetrators might satisfy their action or rationalize their action. Now we will move to the key principle for managing fraud risk. COSO, Fraud Risk Management Guide, emphasize how important it is for organizations to establish strict and ongoing effort to protect themselves from acts of fraud. It outlines out 5 core principles that will be desired to follow. The first one is fraud risk governance, and the second one it's fraud risk assessment. The third one it's fraud control activity. The fourth one is fraud investigation and corrective action, and the fifth one for fraud risk management mentoring activity. The first one, the one is talking about fraud risk governance. Fraud risk governance says that effective governance enable the creation and maintenance of an ethical climate within an organization, which can help prevent or deter fraud. The overall tone at the top that we talked about over and over in every chapter, the overall tone at the top in effective establish the organization of fraud tolerance. The fraud risk governance, it's an integrated part of the corporate governance as a whole. So we have talked about the corporate governance as a whole in chapter 2, and fraud risk governance is an integral component of the corporate governance. and the internal control environment, which was the first component of the COSO internal control framework. The second principle says that fraud events or scenarios will vary from one organization to the next. The scenarios of fraud depends on business model, the industry the business is working in, the location of the business, and the culture, and also other similar factors. When complying or doing a brainstorm of potential fraud scenario, it's helpful to gather information from external regulatory bodies. Also, it's helpful to go to the industry sources, guidance on setting groups, for example, the IIA and professional organization. Fraud risk assessment addresses the risk of the FFR, and also addresses the fraudulent non-financial reporting. So it will address the financial reporting, fraud from financial reporting, and also fraud from non-financial reporting. Also, it addresses the assets misappropriation, and also illegal acts, for example, corruption. The third principle, which is the fraud control activity. Fraud control activity is a specific procedure or processes intended either to prevent a fraud from occurring or to detect fraud quickly in event that it's occur. For example, the fraud control activity to prevent the most effective way to prevent fraud is awareness program, and the most controlled activity to detect fraud is the hotline, which we will discuss later in this chapter. The fourth principles, which is talk about investigation and corrective action, will go in depth and later. It's the organization governance. It says that the organization governance board ensure that the organization develops and implements system of a promote, component, and confidential review, investigation, and resolution of incident of non-compliance and allegation involving a fraud. What that means that the organization and the board governance of the organization must make sure that they have a very strong system of first reviewing these component, also investigation, that they have system of investigation about fraud incidents, and they have a system how to resolve or do correction action of a fraud identification. The fifth principle, which is about monitoring activity. Organization uses a fraud risk management monitoring activity like the one we talked about, either ongoing or a separate evaluation or a combination of both. The organization must ensure that each of these five principles of the fraud risk management is present and functional as designed, and that the organization identify needs changes in a timely manner. Now, let's move and talk about governance over the fraud risk management program in depth. A strong governance provide the foundation for an effective fraud risk management program. As we have said before, that the governance is the structure for the whole organization. For the example, tone at the top, it's the most powerful tool for governance. This is the same in fraud. So strong governance provide foundation for an effective fraud risk management program. Some organizations have developed corporate culture that encompass strong board governance practices, include for access to multiple layer of management, also effective control of whistleblower hotline. So any organization that have a strong fraud governance management program, it must have a whistleblower hotline. Independent nomination process for nomination the board members, also nomination the senior management, also effective senior management team. So if we have an effective senior management team, we will have a very strong fraud risk management program. Also a code of conduct specific for senior management. We already have a code of conduct for the organization as a whole, but here they required a code of conduct for a specific for senior management. Also a strong emphasis on the board's on independent effectiveness of the board and a process through board evaluation, executive sessions, also an active participation and oversight of strategic and mitigation efforts. This is what some organization may have to develop to encompass strong board governance practices. Now let's move on to talk about the rules and responsibility, which is under what governance under this subject. The rules and responsibility in a fraud risk management program must be formal and communicate. How we might do it through policies, procedure, job description, charters, delegating of authority, and are important in defining the various rules and responsibility for such a program. Generally, the following rules and responsibility are embedded in successful fraud risk management program. So, for example, any successful fraud risk management program will put the responsibility of setting the tone at the top on the management. The board of directors, let's first talk about the board of directors responsibility. The board of directors responsibility is to help set the tone at the top. They do so by embracing the governance practices listed previously here. Also, they have the responsibility of oversight the management. They need to have a general understanding of a fraud relating policies and procedure, also incentive plans, and etc. The board of directors must have a comprehensive understanding of the key fraud risk. So they have a general understanding of fraud related policies or procedure and incentive plans. However, they must have a comprehensive understanding of the key fraud risks. Also, the board of directors need to have an oversight of the fraud risk management program, receiving and mentoring reports that provide information about fraud incident, investigation status, and disciplinary action. Also, the board of directors need to have the ability to retain outside counsel and experts when they need it. For example, they get the need of internal auditors or a fraud examiner. The board of directors need to direct the internal audit function and the independent outside auditors also to provide assurance regarding the fraud risk concern. Now let's talk about management responsibility. Management responsibility, it's not very different than the board, but the main responsibility is on the management shoulder. Management is responsible for implementing the overall fraud risk management program. This includes direction and oversight over the system of internal control, which must be designed and operated in a manner to prevent fraud incident or at least detect them timely. Employees, they will execute day-to-day fraud risk management program activities, so they must be involved. All employees must be involved in fraud risk management program. Internal audit function, the internal audit rule is primarily from the independent assurance they give. So the internal audit will provide an assurance that the control are in place to manage fraud risk are designed adequately and operating effectively. Now let's talk about the component of risk management program. Uh, uh, there is no one size, or there is no one size of program that will fit all organization. So most organizations have written policies, procedure relating to fraud, and typically have some activities associated with assessing risk, designing effective control, mentoring compliance, conducting investigation, educating employees, and so on. However, few organizations have comprehensively tied all of these together in integrated program. So typically any successful integrated program have these key components. The first component is commitment. So the commitment by the board and senior management for the fraud risk management program. Also a fraud risk awareness activity. This is a very strong tool that helps employee understand the purpose, requirement, and responsibility of the program. This will increase the awareness the employees has about fraud and the consequences of a fraud. This might be a very effective tool to prevent the fraud. This and the third one is communication to all employees. So communication, either oral communication during organization meetings, or posting on the internet, or through the website, or either a training. So the any successful integrated program must have a very effective communication that communicate the fraud risk management program to all employees. The fourth component or key component is an affirmation process that requires employee to affirm periodically, typically annually, that they understand and are comply with the policies and procedures. For example, I will give you an example as a student. Let's say that the violation of copyrights is a fraud. So in each time that you will sign a paper that you will not violate the copyrights, if you sign it only when you enter the college, the incident of you committing copyright violation will be bigger than if you sign it each time before you upload or submit any assignment. So an affirmation process is an effective way to eliminate or prevent fraud. The fifth key component is a conflict disclosure protocol or a process. This process helps employees self-disclose potential or actual conflict of interest. For example, before doing any transaction with a vendor, the merchandise manager sign a paper that they have no relationship, or they do not have a first relationship or second relationship with the vendor or the supplier. This is will be a conflict disclosure protocol. The sixth key component is a fraud risk assessment. The fraud risk assessment, which help to identify all reasonable fraud scenarios, which we will talk in depth later. The seventh is reporting procedures and whistleblower protection. Also, we'll talk in depth later. This provide a well-known and easy avenue for individual whether inside or outside the organization, to report suspect violation or incident. For example, if you see someone who committing a violation of copyright, you tell, there is a whistleblower hotline that you tell the teacher or the professor without defining your identity. This is will help the other student to tell in each other, and this is will provide a less opportunity to commit a copyright violation. The eighth component is an investigation process. An investigation process that ensure all matters and grow and timely and through investigation as appropriate. This is also, we'll talk about it in depth later. Disciplinary or corrective action that addresses non-compliance with established policies and help deter fraudulent behavior. The 10th way is process evaluation and improvement to provide quality assurance that the program we have developed continue to meet its objectives. And lastly, continuous mentoring to ensure that the program continually operates as designed. Including these components in fraud risk management will not eliminate fraud risk. It will, however, provide reasonable assurance. Usually, whatever we do, there is still a teeny tiny possibility that a fraud will occur, whatever we do. So we usually just be able to provide reasonable assurance that the fraud incident are prevented or detected timely and dealt with it appropriately. I will stop here, and this will be the first part of our chapter. In the second part, we will start with the fraud risk assessment and hopefully in the chapter. Good luck.